What is happening, crypto crew? Get ready to dive headfirst into the most explosive updates shaking the digital asset world. The news cycle is moving at lightning speed, and if you're not plugged in, you're missing out on the moves that could define the next market phase. We've got seismic shifts, insider insights, and indicators pointing towards massive potential. Stay locked in, because what we're about to break down is crucial for navigating the current landscape and positioning yourself for what's next. You do not want to miss this, it's going to be epic. Let's get into it. First up, we're tracking a major heavyweight who's not just talking about the future, but actively shaping it. This billionaire investor is sounding the alarm on traditional financial systems and pointing directly to a certain digital asset as the ultimate safe haven. His latest pronouncements are igniting a firestorm of discussion and could be the catalyst for a massive influx of new capital. Get ready for the deep dive into why this endorsement is turning heads and what it means for the market. Next, we're seeing a groundswell of adoption that's flying under the radar, but is incredibly significant. It turns out that everyday businesses, not just tech giants, are quietly but steadily integrating a certain digital asset into their strategies. We're talking about real companies, across various sectors, allocating substantial portions of their profits to this digital powerhouse. What's driving this widespread adoption, and what does it signal for the broader economy? Then, we've got to talk about the big players and their movements. Recent on-chain data is showing some surprising activity from major wallets, and it's sparking serious debate about potential market impacts. Are these moves a sign of confidence, or are they signaling a shift that could affect prices? We're breaking down the numbers and what they could mean for your portfolio. And finally, we're connecting the dots between global economic trends and digital asset performance. Analysts are pointing to a significant weakening in a major global currency, and they believe this is creating a golden opportunity for digital assets. We'll explore the correlation, the data, and what this economic shift could unlock for the future of finance. Stick around because you need to know this. Make sure you're subscribed and the notification bell is on so you never miss a beat. Billionaire backs digital gold amidst dollar fears. The global financial stage is buzzing as billionaire investor Ray Dalio, the founder of Bridgewater Associates, issues a stark warning about the US dollar's future. Dalio, a widely respected voice in finance, has indicated that the United States is approaching the latter stages of its debt cycle, a critical juncture that could significantly challenge the dollar's long-held status as the world's primary reserve currency. This economic outlook, he suggests, naturally elevates the appeal of assets with limited supply, such as Bitcoin and gold. Dalio's commentary gained particular traction following a perceived misrepresentation of his views in a Financial Times interview. In response, he took the unusual step of releasing the full interview recording, during which he elaborated on the evolving role of cryptocurrencies. He explicitly stated, "Crypto is now an alternative currency that has its supply limited, so all things being equal, if the supply of dollar money rises and/or the demand for it falls, that would likely make crypto an attractive alternative currency." This statement underscores his belief that Bitcoin and other cryptocurrencies are increasingly viewed as viable alternatives to traditional fiat currencies, including the US dollar. The narrative of a weakening dollar is further complicated by ongoing legal challenges to former President Trump's tariff policies. A federal court recently ruled that Trump overstepped his executive authority by imposing these tariffs, asserting that such power rests solely with Congress. While the Trump administration is preparing an appeal, the tariffs remain in effect. This legal uncertainty, coupled with previous court blocks and frequent modifications to the tariff plan, has introduced significant volatility into both stock and cryptocurrency markets. The resulting instability has, paradoxically, weakened the perceived stability of the US dollar, prompting investors to seek out more resilient and promising assets. This shift in investor sentiment is reportedly driving a migration towards Bitcoin and other cryptocurrencies, a trend that seems to be reflected in Bitcoin's recent volatility index, which has remained remarkably stable. This steadiness, contrary to typical market expectations during periods of economic uncertainty, suggests Bitcoin is consolidating its position as a more reliable asset. This environment is particularly favorable for utility-focused projects like Bitcoin Hyper, which is currently in a pre-sale phase and has already garnered significant attention, raising over $13.7 million. Bitcoin Hyper aims to enhance Bitcoin's transaction capabilities by acting as a Layer 2 upgrade, promising faster and cheaper transactions by addressing Bitcoin's current limitation of approximately 7 transactions per second. This scalability solution, utilizing technologies like the Canonical Bridge and the Solana virtual machine, aims to decongest Bitcoin's main layer, reducing confirmation times from hours to mere seconds, and enabling the processing of thousands of transactions per second. This upgrade positions Bitcoin Hyper to potentially facilitate broader institutional adoption and mainstream use cases. With investors increasingly placing their trust in Bitcoin, and prominent figures like Ray Dalio and Michael Saylor amplifying the narrative, the market sentiment appears bullish. Despite historical trends suggesting a September dip for Bitcoin, current indicators, including the steady migration from fiat to crypto and the ongoing developments in projects like Bitcoin Hyper, suggest a potentially strong bull run could be on the horizon. The success of the Bitcoin Hyper presale, with its substantial fundraising, further validates the growing investor interest and confidence in the digital asset space. But is this stability a sign of strength or a calm before a different kind of storm? Stay tuned as we explore the surprising ways everyday businesses are now embracing digital assets. Main Street adopts digital gold. Businesses invest 22% of profits in Bitcoin. In a significant development for cryptocurrency adoption, a new report from financial services firm River reveals that businesses are increasingly allocating a substantial portion of their profits to Bitcoin. On average, business clients are investing 22% of their earnings into the leading digital asset, signaling a growing confidence in its long-term value and utility. This trend indicates a broader acceptance of Bitcoin beyond speculative trading, positioning it as a strategic financial tool for corporate treasuries. The report highlights that ordinary companies, often overlooked in favor of large institutional investors, have quietly acquired approximately 84,000 BTC in 2025. This figure represents a notable portion of the total assets managed by institutional funds, underscoring the collective impact of smaller, widespread business investments. The real estate sector has shown particularly strong engagement, with nearly 15% of firms in this industry reinvesting profits into Bitcoin. Other sectors, including hospitality, finance, and software development, are also participating, allocating between 8% and 10% of their profits to the cryptocurrency. The diversity of these adopters is striking, ranging from fitness studios and construction companies to even religious nonprofit organizations, demonstrating a wide-ranging appeal. Sam Baker, an analyst at River, points out that the media frequently focuses on the large-scale adoption by major corporations, often neglecting the significant trend of smaller businesses integrating Bitcoin. He attributes this surge in adoption to several key factors: the improvement of accounting standards for digital assets, increased regulatory clarity, growing institutional recognition of Bitcoin's potential, and the sustained strength of the current bull market. These elements collectively create a more favorable environment for businesses of all sizes to consider Bitcoin as a viable asset. Interestingly, the majority of these businesses are small enterprises, with over 75% of them employing fewer than 50 people. River's analysis suggests that smaller companies face fewer bureaucratic hurdles, making the adoption process smoother compared to larger corporations with complex decision-making structures. While most small businesses are investing modest amounts, with over 40% allocating between 1% and 10% of their net profits to Bitcoin, a dedicated 10% are investing more than half of their profits. This indicates a spectrum of commitment among business adopters. A significant barrier to even wider adoption, however, remains low public awareness. Baker cites a Cornell University survey indicating that only 6% of Americans are aware of Bitcoin's finite supply of 21 million coins. This lack of fundamental knowledge, he argues, often leads to assets being dismissed without proper evaluation. The expert concludes that many potential adopters are missing out on the opportunity due to insufficient information about Bitcoin's core characteristics, rather than a deliberate rejection after analysis. Despite a market correction in August that saw Bitcoin prices decline, traders continued to increase their positions, reflecting a strong underlying belief in its future appreciation. This resilience, coupled with the growing trend of business adoption, paints a picture of a maturing asset class increasingly integrated into the real economy. While businesses are quietly building their Bitcoin reserves, are the giants of the digital asset world making moves that could shake things up. We're now turning our attention to the on-chain data and the potential ripple effects from major wallet activity. Galaxy digital outflows raise red flags amid Bitcoin's September recovery attempt. Following a challenging August that saw Bitcoin prices drop by over 13%, the market entered September with a cautious optimism, as BTC managed to turn green in early trading. However, recent on-chain data has surfaced concerning activity from wallets associated with Galaxy Digital, a prominent digital asset management firm. These large-scale transactions have ignited fears of potential sell pressure that could undermine Bitcoin's nascent recovery. Galaxy Digital, known for its comprehensive financial services in the cryptocurrency space, including over-the-counter (OTC) trading, has recently been linked to significant whale transactions. Observers are closely monitoring outflows from wallets connected to the firm, interpreting them as possible indicators of impending sell pressure. Analyst Martin highlighted an hourly outflow of 691 BTC on September 4th, cautioning that this kind of outflow can precede near-term sell pressure. Watch liquidity, spreads, and price reaction. This warning underscores the sensitivity of the market to large movements from influential players. The concern is not unfounded. Charts reveal a consistent pattern of multiple outflows from Galaxy Digital associated wallets throughout August, ranging from 600 BTC to over 2,400 BTC. During this same period, Bitcoin's price trended downwards, lending credence to the theory that these outflows contributed to the market's decline. Adding to the chatter, on-chain monitoring account OnChain Lens noted the reactivation of a dormant Bitcoin wallet after 12.8 years. While this particular wallet moved a relatively small amount of 0.25 BTC, worth approximately $28,000, it still holds a substantial 479.44 BTC. The awakening of such an old wallet, even with a minor transaction, points to a broader trend of early-era Bitcoin holders resurfacing as the asset trades at six-figure valuations. Expanding on the whale activity, analyst Coyer Oliveira observed that Bitcoin whales have collectively offloaded more than 100,000 BTC in the last 30 days. Data from Block Trends confirms this as the largest monthly selling wave since 2022. Oliveira, however, notes a crucial difference this cycle. Yes, whales have been dumping the largest amount of Bitcoin this cycle, but the price hasn't suffered as much as in other periods. This resilience is attributed to robust demand that has absorbed the selling pressure. Block Trends further reported that companies have accumulated a staggering $43 billion worth of Bitcoin in 2025 alone, surpassing the total investment in 2024. These corporate entities now hold over 6% of all BTC in circulation, a significant increase from just 0.28% in 2020. Adding to the narrative of Bitcoin's growing stability, a report from Econometrics indicates that Bitcoin's volatility remains exceptionally low, even amidst macroeconomic uncertainties. Right now, Bitcoin's 30-day realized volatility is lower than 83% of the weeks in the past 10 years. Uncertainty yes, panic no, the report stated. This sustained low volatility, driven by strong accumulation demand, demonstrates Bitcoin's enhanced capacity to absorb sell pressure and its transition towards being perceived as a less risky asset within traditional finance. While whale movements create waves, broader economic currents are also shaping the digital asset landscape. Let's shift our focus to how global currency trends might be creating a unique opportunity for Bitcoin. Dollar weakness fuels Bitcoin bullishness, QCP Capital reports. Analysts at QCP Capital are highlighting a significant shift in the global economic landscape, suggesting that the weakening of the US dollar index, DXY, to a 50-year low, coupled with rising bond yields, presents a strongly bullish signal for Bitcoin, often referred to as digital gold. The DXY has seen a notable decline of 11% since the beginning of the year, settling at 98.23 points. Concurrently, gold prices have surged to a historic high of $3,578. Stephen Gregory, founder of the vTrader crypto platform, interprets this correlation as clear evidence of institutional investors actively hedging against dollar weakness. He anticipates that liquidity from the precious metals market is likely to flow into assets characterized by fixed supply, such as Bitcoin and Ethereum. Simultaneously, global markets are experiencing a widespread bond sell-off, with yields on 30-year government securities in the US, UK, Australia, and Japan showing a sharp increase. Robin Brooks, a senior fellow at the Brookings Institution, described this phenomenon as anomalous, noting the unusual circumstance of 30-year Treasury yields rising during a period of Federal Reserve easing. Brooks further elaborated that this trend is exacerbated by a global shift towards issuing debt with shorter maturities, leading to a broad increase in long-term government bond yields. He posits that this situation is driven not by monetary policy alone, but by runaway fiscal deficits, suggesting a deeper economic imbalance. The widening gap in interest rates, Brooks explained, signals escalating inflation expectations and growing concerns about the Federal Reserve's ability to maintain its policy independence, particularly in light of repeated pressure from the Trump administration on Fed Chair Jerome Powell to ease monetary policy. Gregory further emphasized that in an environment of rising inflation, riskier assets, including Bitcoin, often demonstrate leading market dynamics. This confluence of factors, he believes, could be creating the ideal conditions for a new supercycle within the crypto market. Despite a recent correction from its record high of $124,545, Bitcoin has appreciated by 96% since the start of the year. At the time of reporting, the digital asset is trading around $110,400. Market participants had previously predicted a Bitcoin rally following the Fed's policy easing, and the current economic indicators appear to reinforce that outlook. So, we've seen billionaire endorsements, business adoption, whale movements, and dollar dynamics all influencing the market. But what's the overall picture? We'll wrap it all up with a quick recap and a look at what's next for you. All right, crypto fam, let's do a quick rundown. Ray Dalio is sounding the alarm on the dollar and pointing to Bitcoin as the ultimate safe haven. Businesses are quietly investing a significant chunk of their profits into Bitcoin, signaling wider adoption. Major wallet activity from firms like Galaxy Digital is sparking debate about market impact, and weakening dollar trends are creating a bullish outlook for digital assets. Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. Follow us on all social platforms to stay ahead of the curve. We'll see you in the next one.